Speaking of business, I'm your host, Nancy Boyle. Today we're going to be talking about employees and the issues related around having employees. Joining me today are Bob McKenzie with McKenzie HR and Mark Addington with Addington Law. So welcome, gentlemen.
Thank you.
So I'll start with you, Bob. Tell us a little bit about what you do.
Well, for about the last 10 years, I've had my own company called McKenzie HR. We do a couple of things. One thing is we provide the total outsourcing of HR functions for small to medium-sized companies, and we all do a lot of project work, including developing compensation plans, looking at claims of harassment, discrimination, wage and hour. So we have and training and development as well.
Okay. Mark, tell us about Addington Law.
I started Addington Law in January of 2009, representing businesses exclusively in labor employment related matters, ranging anywhere from disputes regarding wages to discrimination claims to classifications of whether they're employees or independent contractors, things of that nature.
Okay then, let's just see what's the latest and greatest happening with employment laws and what kind of impact is that going to have on small businesses and their employees. So since we said law, we'll start with you, Mark.
Okay. Well, I think right now probably one of the biggest area deals with the classification of workers, whether they be employees or independent contractors. And employers have struggled with this for a while with this particular administration and the focus of the government being to a high degree on whether or not workers are properly classified. The main reason for the interest is that employers may or may not, according to the government, be circumventing certain types of tax obligations by having people classified improperly. One of the things that was a recent development was the IRS has come up with a program called the Voluntary Worker Classification Program. And it's an incentive to get employers to reclassify and not get hit with the same amount of penalties from the IRS. While that on the surface sounds very good for employers, I think further analysis you'd find that there is going to be a significant amount of reporting to other agencies like the Department of Labor, for instance, who might help or support individual employees with back wage issues related to misclassification. So it requires a lot of thought and consideration as to whether or not to jump into the program. And I would encourage employers to think about it not just from the perspective of the tax savings by voluntarily reclassifying, but also look at the broader ramifications and possibilities.
So I want to make sure I'm understanding it. So if I've got employees and I've classified them as independent contractors, I'm not paying certain payroll taxes, and so this is a way for me to do the right thing without being penalized, because if I get caught, I'm going to get penalized. Am I understanding it correctly?
That's right on.
Okay.
The taxes are usually things like workers' compensation taxes, unemployment benefits that employers pay their contribution to. And those are the ways it's usually flagged as a problem for administrative agencies that monitor these things. But also, for instance, the IRS is one of the incentives is that you have a severely reduced penalty for back taxes on things like the federal unemployment tax. The challenge with that voluntary program, though, is that it doesn't restrict other federal agencies or state agencies, and all of these agencies are communicating significantly better now than they were 2 or 3 years ago. So I am sort of adopting the cynical school of we're offering you an olive branch, but in reality it may be a big trap for you, for other agencies to identify those businesses that are having these challenges.
But it would seem to me, though, if you're doing things incorrectly, you want to correct that as soon as you can.
Absolutely, and the question isn't whether or not to do the wrong thing. You do the right thing.
Yeah.
The question is, how do you correct the problem? Do you engage in a voluntary program and deal with a situation where you potentially are creating some red flags for you with other agencies? So the thought is to do it with caution. You always want to do the right thing from the outset. And if something's questionable, then get somebody to help you analyze whether you have it properly classified. The analysis for this is difficult. The IRS has a 20-part test Common law deals with it through something called the economics reality test that the Department of Labor predominantly uses. And many federal courts create a hybrid between those two. So where you are, oftentimes, and what agency you're looking at, you may have a different test applying. So it's not an easy analysis, and I would encourage employers to get help in that analysis and in making those decisions.
With people who know what they're talking about.
Yes, ma'am.
Now, you run into that with your clients?
Oh,
Bob?
absolutely. I run into it all the time. I mean, one of the it is less expensive, you know, to have an independent contractor because you don't have to pay the taxes and do all the reporting. But the problem is that most of them that are using independent contractors have no agreement. Okay, so there's nothing written down, there's nothing there, and what they're doing is paying an individual, you know, doing a 1099 with the Social Security number. And what I recommend is, you know, make sure that the individual that you are contracting is indeed an independent contractor and not an employee. Once you start telling people what time they have to come to work, you start providing training on how to do the work, they start using all of the company equipment, well, then we're starting to negate that independent contractor status, and it looks more and more like an employee. So you've got to make sure that they understand what the ramifications are, and we always ask them to get some kind of an agreement. And, you know, if the contractor has some kind of a business license, so much the better. Because that again separates the employee from a little bit, you know, from the independent contractor status. So yeah, there's a lot of confusion out there, and a lot of individuals or individual business owners think they can just hire somebody on an independent contractor basis, and then the next thing you know, they're getting audited and they're in trouble.
The biggest aspect of that for employers to think about is the degree of control they exercise over the worker.
Yeah.
The more control through scheduling, through training, the process of doing an action, as opposed to just managing the end result. Create 10 widgets for me by this date is an end result. Saying the widget has to be made this way and you have to do it between these hours and these hours with this equipment is managing the process of creating the widget. And you're going to be more likely to be found an employee in that circumstance than an independent contractor.
Okay. Now, another issue that seems to be, I don't know, a lot in the news is the whole immigration thing and changes. Some states are really tightening up on their immigration laws, et cetera. How does that whole issue work here in Florida, and what do employers need to be aware of to make sure that they're hiring the right people and reporting the right information? And then what kind of trouble do you get in if you can't do that?
Well, let me talk to that one. Every employee that is hired by every organization in the country has to complete what they call an I-9 form. All right, the immigration. Well, it used to be INS. It's immigration.
ICE.
Okay, ICE. Okay, as Immigration Customs Enforcement. Okay, they will come out and take a look, and they have increased the number of audits that they're doing. They'll come right into an organization and say, "I want to see your I-9 forms." If you don't have an I-9 form that's completed properly, you can be fined $1,000 per I-9. So the whole idea is to make sure that every block on the form is filled out and filled out correctly. Every block, it's on there, even if you hire your sister, okay, your mother, and you know that they are citizens, make sure you have an I-9.
So that's the form that you have to give them your Social Security number or your passport or something that shows you're a U.S. citizen,
What
right?
you have to do is it's not necessarily that you have to prove that you're a citizen. You have to prove that you do have a right to work in the country and some ID. So an individual who, for example, has a resident alien card, or commonly known as a green card. That actually satisfies both. Somebody's passport satisfies both. So you can't really go out and tell them exactly what forms, but typically you're going to see somebody with a Social Security card and a driver's license, because that's typically what they have.
Or the green card, or...
Exactly, but there's a number of different documents. So the Social Security card will say that you are allowed to work in the country, so you have that authorization, and the driver's license is your ID.
Okay.
But you know, you have to fill out all the things on the I-9 form. So you got to fill out for the driver's license, for example. You can fill out, okay, who the issuing authority is. It's the state of Florida. The document is a driver's license, and you got to put the driver's license number on there, expiration date, and you've got to fill out every one of those blocks. And the thing is that they have to be kept for a period of 1 year or 3 years after termination. I mean, 1 year after termination, I should say, or 3 years, whichever is longer.
Okay.
So if you had, you know, employees that you hired and laid off, you know, within 6 months, you've got to maintain that I-9 for another 2.5 years. And if you don't have them, that's where, you know, and I've seen a number of companies get audited lately, and it's just not fun because, and the thing is, most companies don't even know.
Another challenge with that is how you keep those records. I recommend that you keep those records separate from your regular employment files in a separate binder. And the reason is, if you do get this particular agency coming in, do you really want to give them access to everything in your employment file, or just those that they have jurisdiction over with regards to verifying those right to work or ability or eligibility to work in the United States? So many, especially smaller, medium-sized employers, never think it's a document we did at the hiring, we throw it in the personnel file. But then one day you get that knock on the door, and suddenly you know you're having to produce all of your records as opposed to just what's required. So being proactive in that is another good tip for employers that might help them mitigate some liability with other agencies.
Well, and if you're photocopying Social Security cards with all this identity theft, don't you have some obligation to protect that information?
Absolutely.
So, I mean, if you're keeping this information, whether it's in an employee file or in a separate folder, I mean, don't you have to have some security measures in place?
Yeah, absolutely. It is identity theft, and you know, it can be used for that. And there's many cases where people, you know, kind of crawled through the ceiling to try and get that information. So you do have some very sensitive information on there, because you got to have the name, the address, Social Security number, driver's license, or you know, a lot of information that people that go into identity theft want. So it's got to be locked up.
It's not required that you keep a copy of the actual document. Okay, which a lot of employers do. And there are different schools of thought on this, but you know, from my perspective, I don't like keeping personal information that might be used identity theft in my records if I can avoid it. Now, yeah, the I-9s are there, and you have to manage that properly, and arguably you'd be keeping all of those together. But even if you had that copy of that document and you wrote it down wrong, that's a violation. So you've actually flagged that you have a violation because you didn't properly fill out the form.
Wow.
So yeah, it can be pretty heavy.
Yeah, so we recommend, and I know Mark does too, recommend that because a lot of companies will make copies of the license and Social Security or passport or whatever and attach it. And we recommend you do not do that. It's not required, and it can only hurt you. It can't help you. So if you're going to put something in the file that can only hurt you and can't help you, there's no reason to have it.
Yeah. If the auditor is looking at an improperly filled out form, the fact that you have copied the documents that should be on there doesn't save you.
Okay. Okay, now that's an interesting concept. You've got to have it right on the form.
Exactly.
Okay, picky. So what are some other picky issues that we need to talk about?
Oh, I would say it's a couple things. Wage and hour is getting to be a big thing.
Okay, what does our audience need to know about wage and hour?
People have to know, God, they have to know the difference between a salaried employee and an employee that is deemed to be paid by the hour by the Fair Labor Standards Act. There are what they call white-collar exemptions out there. And again, this is something that a lot of small businesses especially are not told, that they have to be in compliance with the wage and hour laws. That's another term for that. It's a federal law. In Florida, we do have minimum wage, and it's going up to, what, $7.67 an hour in January. So that's one of the things that does govern is the minimum wage, and it also governs overtime. Certain positions, depending on the duties and responsibilities, and it has nothing to do with job titles, okay, duties and responsibilities of the job, have to be paid overtime after they work 40 hours in a work week. And there's rules on what counts as work time. There's also, but the biggest issue that we see is that their misclassification of whether they're a salaried, quote unquote salaried, or an exempt employee, or an hourly employee, and they have to be covered under overtime. If they're exempt, they don't have to be paid overtime for anything over 40, but they have to meet the qualifications.
So this is a whole classification issue, almost in there with the independent contractor issue of making sure that the employee is classified based on the work that they do.
Right. I guess there's some parallels in that you're looking at how you classify an employee, but it's much different in that it's not a control matter. It's a matter of whether they qualify for an exemption. The way the law looks at it is all employees are going to be able to get overtime unless you fit very narrowly construed exemptions, the white-collar exemptions that Bob was referring to. And so when the courts look at those, they scrutinize that you meet the job duties requirements. There's a salaries side where you have to be paid on a salary basis, at least $455 a week, and then the job duties side, depending upon the exemption that you're seeking to use to avoid paying overtime because they are exempt. And that differs depending upon the circumstance. There are three major ones dealing with administrative, executive, and professional exemptions. But other than that, there are some that deal with computer professionals, for instance. There's some that deal with outside salespeople. So there's different types of exemptions. The real critical thing here is that you have somebody make sure that you know and do the job duties analysis. A pretty common error that a lot of small employers make is they say, I pay you by a salary, therefore you don't get overtime. Salary is just one half the equation.
Okay.
And so because you're paid on a salary basis doesn't mean you can't get overtime. It's if you're exempt because you're paid both on a salary basis and you have the job duties requirement fulfilled within the statutes. And so that's the analysis that employers are commonly missing on that.
What would be an example then of the type of position or person who oftentimes the employer is, maybe for not having the right information, not classifying properly?
An accounting clerk.
An accounting clerk, okay.
Or even sometimes it'd be an accountant, okay? Here's what's happened, I think, in the last few years with the downsizing of the employers. They had no choice but to lay off some people. So typically a person it was a manager, okay, and not actually doing some of the work, and they were managing a group of people and doing administrative kinds of things that qualified as an exempt position, now are forced to do, and I'll use a warehouse manager as an example. The warehouse manager was there managing a group of people. Now the warehouse manager is actually going out, okay, and picking all the parts or loading up the shelves and doing the kinds of things that the employees were doing, which did not qualify as an exemption, or so they had to be paid hourly. Now that manager, even though he's got manager title, duties and responsibilities, and he's taken up 80% of his time doing stocking and and pulling of parts, that's now a non-exempt position.
Interesting.
Okay.
So just because you've made it to one level in a crunch, and you're taking on more of the duties of the people you used to manage, now that puts you in a whole different light.
I think a key there is, first of all, your title is not part of the analysis.
Okay.
So because they call you a manager or a warehouse manager in Bob's example, doesn't mean you're exempt. It's the actual duties you're doing, and so that's where the analysis has to take place. Probably one of the easiest example I think people might be able to relate to is Starbucks. They've gone through tons of litigation in wage and hour because the managers aren't very distinguishable, arguably, from the regular baristas that are making your coffee.
Okay.
I mean, with the exception of some inventory work, you know, their functions are very similar, and they don't have the same degree of control and managing aspects to meet, in all cases, that narrowly construed exemptions. So it's not just a warehouse industry, it's the idea that the actual functions of the job are what drives whether or not the exemption is met.
Yeah, and that's a good example. And the fact is that in Starbucks or many other places, the managers are actually, you know, like you said, they're a barista.
Right.
They're
well, in a lot of Florida's a hospitality service sector place.
Right.
The hospitality industry deals with wage and hour issues frequently, and you know that there are a number of restaurants, even locally, that have been hit lately with some very severe penalties with regards to how they've handled overtime-related issues or classification issues. So it's definitely something that business people, period, but especially medium and smaller business people that maybe haven't been consulting or following or understand what those exemptions really entail, probably should do the due diligence to make sure they're compliant.
Yeah.
Well, and you mentioned restaurants because, and especially the whole minimum wage issue, and then you have servers in restaurants who are relying on tips and they're not being paid typically minimum wage because they're supposed to get a guarantee in tips that brings them up to minimum or something. So let's talk about that issue.
That's an interesting one. Actually, right now there's a Supreme Court case. It's an Applebee's International case that's come out of the Midwest and has been accepted, but it deals right on this issue. And there is a tip credit, is what it's called essentially, that is given to employers where you can pay less than minimum wage. You know, either the federal or in Florida, the state minimum wage, which is $7.31 now and will be $7.67 in January. But that tip credit is provided for employees that are in tipped positions. And this Supreme Court case that's going oral argument right now deals primarily with the idea of having those employees do things that they're not tipped for, having your servers, your bartenders clean or stock or clean bottles. And to what extent does that kick them out of a tip credit classification? So there are different scenarios and different job duties and a lot of analysis that really needs to be done to make sure you're classifying your employees properly.
Sounds very complicated.
It is a little bit complicated, and in Florida it's a little bit different because the minimum wage for servers, okay, is a lot higher than the federal. Okay, so that's kind of getting closer and closer, and each time the Florida minimum wage goes up, like it's going up by 36 cents or whatever,
the tip credit goes up proportionally.
Proportionally, it goes up the same number. So I think it's going to be up to like 4.60 something an hour.
4.35.
Okay, thank you. I thought it went up to. I thought it was still already at 4.35.
You might be right. It's essentially a $3.02 tax.
It's 4.35 now. Okay, let's just say so. It's a little bit closer to the minimum wage of 7.31. So basically if the server averages $3 an hour in tips, then they're getting up to the minimum wage.
So that's what they're looking at, is the average tips and what that is, and the difference between that and minimum wage is what they have to pay as their salary portion or their
wages,
their wages portion.
Right.
And those people that are in those tip positions need to be declaring at least that.
Right.
And
so now what happens if they don't?
If they don't and it's audited, then it can become a very broad problem.
Because I would venture to say a great deal of tip money that's collected, which is cash, I mean, it's one thing when somebody puts it on a credit card, but when you're collecting cash, I would say there's probably a lot of tip money that is going in the pocket and not going on the tax return.
Well, I certainly wouldn't want to disparage any server by saying they're not reporting their taxes. Each individual has an obligation to report their full taxes. If it doesn't get there, then at what point does it become an employer liability? That's the real question there for small businesses, and that happens based upon the amount of time that. Or the amount of money and whether it makes up the difference between the tip credit and minimum wage in the proper jurisdiction.
Okay, so what else have we got going on with wages?
I just want to talk about that too, because a lot of organizations also have come up with a no overtime policy. Okay, we're not going to pay overtime. So if somebody works more than 40 hours, they just don't pay them because they have this policy. Or they will have a policy that states that we will not pay overtime for any unauthorized work that's done that's over 40 hours. Problem is, you can't do that. You got to pay for every hour worked. Okay, or there was a Walmart case not too long ago where the employees were required to clock out and go back to work. Okay, because they had to keep their costs down. So employees got upset by that, contacted Wage and Hour, and sure enough, they had to get all the back pay.
I'll tell you an interesting flip side of that argument. There's now an issue with Target where they terminated an employee for working on his break. And arguably they had a policy they were seeking to enforce, and he was going to work on his break anyway, and was disciplined and ultimately terminated for it. And now the question is, to what extent is there a liability for terminating somebody for working when they're supposed to be on break time? But the obligation of the employer is if they're working, they're paid. Period. That's it. And so you can create these policies and discipline much like Target did, which is exactly the opposite, I guess, of the example that Bob used earlier.
Or another thing would be that if somebody's eating lunch at their desk over a half hour and they actually pick up the phone and they talk to a customer, well, at that point they're working. So you have to pay them for that time. The breaks that the Wage and Hour laws allow to be unpaid or have to be a minimum of 20 minutes. So anything less than 20 minutes, okay, is a paid time as far as a break is concerned. If your break is 20 minutes or more, that can be unpaid. But we recommend that we tell the employees to get away from the workplace, get away, don't do any work, don't even talk to people about work or certain things that are done. So if they do a little bit of work while they're on break, then or on lunch break, it's considered work.
One of the biggest challenges is that a lot of businesses have a middle manager that's responsible for a budget, and they're trying to manage their workforce. And you have employees that often may be laid off based on productivity. So they want to produce more widgets, even sometimes during their break, to keep their productivity up and not be laid off. If a manager tacitly agrees to that, the manager's violating the law. He can't do that. He has to pay for time worked. And so that's where I think in this economy a lot of businesses have really started to have more and more issues.
Well, and it behooves the employer to be aware of these issues, because if they're not, they might inadvertently, not that they're trying to pull a fast one or anybody's trying to get anybody in trouble. You're trying to do the best you can. Employees want to keep their jobs. So it really does behoove everybody to know what's going on.
Make sure what's going on, because Wage and Hour investigators are really coming down hard. They're looking at every little thing they can look at. In fact, on their website, if you go onto the Wage and Hour website, they have a loyal referral service now. So if you want to file a complaint, you can go right to one of the referral services they have on their website to sue employers.
Well,
so it's more in favor of the employees at this time. And plus, on top of that, they've come up with little apps for your smartphone to keep track of your hours, which aren't really the official, but it was like to utilize so that if you're going to go and file a complaint against your employer, you're going to have your own little record of your hours worked.
Okay, and on that note, we're out of time. So thank you, gentlemen, for joining us today. Thank you in the audience for joining us. Come back next time when we'll be speaking of business. Bye now.